So I'm going to say 3 words and probably make the hair on the back of your neck stand up. Adjustable rate mortgage. Okay, so if that didn't make the hair on the back of your neck stand up, something's wrong with you. Or you haven't been in the housing market for the past 10 or 15 years, which probably a lot of you have not. So here's what happened back in like 2006, 2008. The biggest culprit of the bubble back in those days, I don't care what anybody says, I have proof, and I was part of that part of the mortgage industry at that time, and I saw it coming. If you need even more clarification on it, watch the movie The Big Short, and you'll probably find a lot of information in there that's basically will teach you the mortgage business and how derivatives work and everything else. But let me just make this as simple as I can. So what an adjustable rate mortgage is, it's basically a fixed rate for a time duration, and then it starts adjusting. It'll adjust every month or every 6 months or every year. So the first number that we say on an adjustable rate mortgage is the time that it's fixed. And then after that, it'll tell you the duration of time it takes for it to readjust. So for example, a 5-1 ARM, okay? So the 5-year means it's adjustable after 5 years. So you have a fixed rate today, and then after 5 years, it'll start adjusting. And then what happens, it'll adjust every month, every 6 months, or every year. Okay, so that's another part of the puzzle. And then when you have the 7-year ARM, you have it's good for 7 years as a fixed rate. And then after 7 years, it starts adjusting. And the same thing with the 10-year. So when I do my mortgage report every day, I show Mortgage News Daily's rates that they post nationally every day and where rates are. And you can see that right behind me. So I'm going to show you something here. So if you look through here, you're going to see the 30-year fixed rate is at 4.95. But then over here, it's saying the 5-1 ARM, so it's a 5-year fixed, okay? Then it starts adjusting, is at 3.95. So the differential here is 1 full percent, meaning you can get 3.95 on the 5-year and 4.95 on the 30-year fixed, okay? But if you've ever watched any of my videos, you see that we have a system that we plug in the criteria of the loan, and then we scan the whole country, over 130 different lenders, to see where the best rate is out there that we have access to. So I am part of the largest mortgage brokerage in the country. It's Nexa Mortgage, and we are the largest and fastest growing mortgage brokerage in the country. There's a lot of reasons for it. If you'd like to learn more about what we can offer you as a mortgage person, please reach out to me. If you're a realtor and you want one-stop shop that has basically all the programs you need and scans the whole country over the best rate for your clients, I'd ask you to reach out to me as well. So that being said, the results I found were a little shocking, okay? So today I scanned the system and I was using a $300,000 purchase with 5% down with a 740 credit score and a pretty good loan, a pretty average loan that we see. And the results weren't what Mortgage News Daily was showing me. Okay, the best I could find on a 30-year fix today, and when I talk these terms, I always talk about paying the least amount of fees as you possibly can. Now, can you get better rates than what I'm quoting you by paying down on something, or you might have better credit scores than the system has, or you're putting more money down? There might be some variances on what would change your rates, but I just took a generic loan, again, a $300,000 purchase, with 5% down, 740 credit score, the property's in California, it's a single family home, and that's it, okay? So the 30-year fix I was able to find through our whole system, the best rate out there with no points was 4.99%, okay? And then I'm like, okay, well, let's start digging into the 5 years and the 7 years and the 10 years. Well, to my surprise, and again, I'm scanning the whole country, over 130 different lenders, the best 5-year ARM I found was 4.875. So the going 30-year fixed rate in that scenario was 4.99, but the ARM was 4.875. So a difference of not even 1/8%. I would never, ever, ever advise anybody to do that. But then the results even got a little more weird. Then I went to the 7-year. Well, the rates went down, same with the 10-year, but not as substantial as Mortgage News Daily showed it. Those findings found 4.75 in each case, the 7-year and the 10-year. So now what I want to present is, so I can get a 30-year fixed at 4.99, or I can get a 7 or 10-year ARM at 4.75. The difference is not even 0.25 or a quarter in your rate. Would I advise that? No. Now, would my tune change if that spread got bigger? And here's what I mean by the spread. If today's rate, the best 30-year fixed rate I can find you in that scenario is 4.99, what would I accept on my end? Well, maybe 4.25. That's about it. Okay. So once the spread gets to that range, I would be prompted to say, at least offer our clients and say, let's look at an adjustable rate. But one of the first things we always ask you is, how long do you plan on spending in those homes, in your home? Why? What's going to determine for us and help you determine, should we buy down the rate? What's your break-even point? Can we look at different options for terms? And that's what we do. So if you're building a house and it's your $1 million home that you plan on spending your life in, would I take an ARM? No. Now, if it's my starter house, I'm going to be there 3 to 5 years. Would I do an adjustable rate today on the findings that I found today? No. So basically, I thought I was going to come back to you guys and say, hey, I got some great news. Let's start looking at the adjustable rate programs to be able to put you in maybe a better situation, especially if you're out there building a home and you got pre-approved at 2.99 or 3. Now rates are almost 5. But unfortunately, right now, a lot of lenders out there. Now, the only thing I can think of is Mortgage News Daily found a lender somewhere in the country that's offering it. But when I scan my system over 130 different lenders, there's still no appetite on the lender side for adjustable rate mortgages. So that's explaining to you where adjustable rate mortgages are today and why I'm not a proponent of them just yet. But once they do come back in line, I'll post a video showing you the differentials and then the pros and cons in each area. So if this video, if you like the video, please don't forget to give me a thumbs up, subscribe down below. One of the areas I'd like you to at least check out our website. There's probably a bunch of tools there that you could use. And all you have to do is go to therateupdate.com. And there's a whole slew of information here. And if you're looking to chat with somebody, we have a chat bot right here. You can chat and it's either me or the vice president of sales. Or if you wish to call, give us a call at 844-775-5626. Thank you so much for watching. I hope you find value in the channel. Hope to hear from you soon. Take care. Bye-bye.